You gonna count down? Good morning. Welcome to Wednesday, I think it is today, and we are going to be talking about mortgages today. It is day 5. If you look in your jostle under training, under library, under training, it is day 5, mortgages, pre-approvals, loan programs, credit scores, etc. And Joe Tarini from Ross Mortgage, our partner mortgage company, is here, and he's going to talk to us about mortgages. And then we're going to do a small pause, and we will have Jamie Tower from Ross Mortgage also speak to us about list reports. So welcome, Joe.
Thank you, Susan. Good morning.
Good morning.
So I just want to start quickly with pretending that this camera's not here because it will freak me out if I don't. So no matter if there's 3 people watching or 400,000. But let's start with questions. So you know, this guide Stacy wrote from her experience as a loan officer and as a real estate agent. So it's a really useful guide for general information. For specific information that you're going to run into, I'm sure this has been a successful office for a long time under any brand. Like, successful real estate agents have successful mortgage connections that help them in every regard. And this should take you kind of through some general information, but I think probably one of your biggest priorities in terms of business partners, and you're going through it with the presentation and the new hire training, is to find a mortgage person. So is there any questions about mortgages at all before I kind of get into it? No? All right, so the first page is really just a simple definition and difference between pre-qualification and pre-approval. And from my point of view, it differs a little bit from what's in this verbiage in your presentation. This definition is only about 6 months old, but because compliance and mortgages move so fast, things change. Most mortgage companies you deal with it, whether it be Ross Mortgage or Bank of America, will be issuing you a pre-qual. Every mortgage company can take that one step forward if you're in a competitive market situation and give you what they call a true pre-approval. The only real difference is a pre-approval will be physically underwritten by a human being. They'll go through it, they'll check the pay stubs, basically they'll double check all your loan officer's work. And when potentially a seller or a listing agent sees that your approval is subject only to the appraisal, your people have the money, their employment has been signed off, they just need to have a clean title and a clean appraisal, it will give your clients, you, and the listing agent probably more confidence to move that deal fast. What you're going to be looking to send every single time to, when you're representing a buyer's agent and you're sending an offer in, most times they'll ask you for a pre-approval. Almost always you'll get a pre-qualification. There is no material difference other than the underwrite. So what I'm saying is, if you submit 5 offers in the course of the first 5 months of the year, most of those, if they're in a quick time frame, will always be pre-quals. They may say different things because different lending institutions can say different things, but unless that file is underwritten, you have a pre-qual. Go ahead.
I was going to say, is it written on there that it's a pre-qual?
It should be, or it should say this is a notice of approval or different things. If it says it's a pre-approval and you know your client hasn't gone through an underwriting process, it doesn't mean that that piece of thing is a piece of garbage. It just means that we're all running in the same universe here. Like, what you're going to send with an offer is a pre-qual.
Given that it will go through.
Exactly.
If it's a
exactly right. If you do a pre-approval, you know that client has every aspect of the loan signed off, other than the appraisal and the title. And those are the only 2 things that your client don't control.
So that's the one thing too. When you all write an offer to purchase, the timeline on that offer to purchase states that once the purchase and sale has been executed, it's been signed, then it's up to the buyer to begin the formal loan application process, which is different than the pre-approval process.
That's an excellent point.
So that you need to know that there is a difference. Just because somebody's been pre-approved doesn't mean their loan is approved.
That's 100% accurate and a great point, and you'll see that later in the presentation, and it's good that we can skip ahead. But to that point, when you make your offer, at that point or within a day or 2, your loan officer should be telling you, we're submitting this file for approval. Because they don't need title and appraisal for approval. They need basic things that they should already have if they pre-qualed it, right? They got their pay stubs. They know they have assets, and all our approvals, here's the big trick, are generated from Fannie Mae, Freddie Mac, or FHA. That's it. So we can run that same day when we have the information.
Before the offer's been accepted?
Before the offer's been accepted. So once that offer's accepted, The only material difference is we're going to probably, any mortgage company that you deal with will probably collect money for an appraisal or order the appraisal based on the offer, and then the purchase and sales will come in and they'll go out there. But they should be starting to get approved previous to your inspection, previous to all those things, because those are the critical days that you lose. And and in reality, what I've seen, and listen, Ross makes this mistake sometimes too. What I've seen in terms of this year, our big value add is we don't waste those days. Or if we are, we've narrowed it down to a loan officer that we need to get back into in the way that we're doing business in the modern world. Those days are critical towards the end of the days. Now, in a 45 or a typical 45-day closing, I mean, or if you have to extend it to 60, are those days that important? No, but that's not going to be the majority of what you're dealing with, I don't think. I mean, I think when people are motivated to buy real estate, it can't happen fast enough. So a lot of things are exasperated with pressure that don't need to be there. And if the person that's supposed to be helping you is doing their job, you should have all that information in real time. And when you get information in real time and deal with it in real time, there's almost nothing you can't work through. When you're dealing with everything behind 10 days, that's where you run into problems. And that's been our major focus of eliminating that, and that's what you'll deal with when you have reliable partners. If they're doing those things, you're going to generally be okay, and your clients are going to be well taken care of.
So you might have this in your presentation, but one of the things that I think it's important to understand, the difference of an appraisal issue when somebody's putting just 3 or 3.5% down versus somebody that's got 10 or 20% down. How does that impact the deal? And can the loan still happen?
Yeah, and that's in there. We'll go right to that.
Okay.
I think that's a great point.
Because
Nick, you're
a lot
gonna
of you,
get to
like,
mark this up.
to some of you,
Just so you know, this is Nick Athanasiou, and not to interrupt you, Renee. This is the first person Ross has brought in without mortgage experience. He's been with us this is his 13th month, and he just got licensed in mortgage banking.
Congratulations.
Thank you very much.
And the primary reason why we could hire 10 loan officers and me not go insane this year. So Nick, we appreciate that. Just down? Look at you. You darn millennials, man. You can do it all. You can do it all.
so in a competitive market, as buyer's agents, I'll speak for myself, I don't always make an appraisal contingency noted on the offer, depending on the type of financing the buyer has. I want, it's a leg up to be aggressive, to be competitive in an aggressive market. So, but understanding you got to read the pre-approval. You got to understand what kind of financing the buyer is qualifying for. If there's an appraisal issue and it's a 3.5% FHA buyer, that deal will most likely fall through. Versus if it's a 10 or 20% down buyer, they'll just adjust the payments and
Adjust the
PMI
program.
loan.
You're 100%
Yeah.
correct. And this section of it is addressing exactly what Renee was just discussing. There's a section on page 11 and 12, and this is kind of the detailed stuff that Stacy did, but it's from the perspective of a real estate agent on either side of a transaction. And these are the most common things that will knock out a VA or an FHA loan. And here's a recent change of this year that kind of speaks to the points that Renee was just making. On a 3 or 5% down program now, if it's home ready or home possible, those are conventional loans. So if they have a slightly higher FICO and can afford slightly higher mortgage insurance, they can get a conventional rate and you can work through the issues that would derail you on an FHA loan. That said, there's certain issues that are going to derail you on any loan. Like if there's a safety issue on the house, a missing rail on the deck, that's going to have to be fixed by your seller, and your buyer's you're going to have to notice that as a buyer's agent, because it's a little thing at the beginning, to Renee's point, but if you're trying to negotiate that after purchase and sales, that's when the craziness begins. The basic things of a home that you would want from you walking in, that's your common sense guide. Peeling paint, toilet that doesn't work, a leaking roof. They're not as crazy as they used to be in terms of detail orientation as an appraiser, but these things that are cited here will 100% knock you out of an FHA loan. And FHA is a great tool to use, but to the point again, if that person has those things in their homes, I'm sure you're going to find a seller that instead of fixing 5 things that are menial to them, just move to the next conventional buyer that has 10% down, because that conventional program is just an adjustment of down payment. And these are the things that will, the things I cited. Peeling paint is a big problem with them. Missing handrail, Stacy has in there. Obviously any broken, missing windows or glass, and roof issues. What we see less and less of is an inspection of an inadequate electrical system. And that, frankly, is because real estate agents and inspectors are doing a much better job with that. We almost never deal with that with an appraisal because everybody knows if you're not up to grade, like, not only is it difficult to sell the house, but it's a $1,000 repair that a seller can usually do and avoid another inspection, an electrical inspection. So when that gets seen at an inspection, you'll find that we won't be at the 11th hour saying, ooh, we don't have the right ampage or whatever they call it in your house. You know what I mean? Like, this will be glaring if it's electrical. So that's why it's there.
And does the home inspector have to be FHA or just VA?
No, and there's no longer a home inspection needed on either an FHA loan or a VA loan.
Okay.
So that if they do those, they're doing them for the benefit of your buyer alone. We don't need them. The appraisal will note anything that's glaring, but they're not, like, you'd be hard pressed to find an appraiser to say, oh, that electrical system seems like it may be a little bit weak for, you know, the 66 outlets you have in the home. They don't really get into that because they're not electricians. Like, if they see a box and it seems clean and it's closed, they're checking the next box in their appraisal. They're looking at bedrooms, usually bathrooms, you know, square footage, that they have a little bit of negotiation room when when you have the space below your home that's up above grade and down grade, and that's kind of even moving more to the middle now for appraisers. But other than that, I mean, it's the stuff that you're going to see usually as you're walking a potential buyer to the home, and it's just something to keep your eye out for. And if you see, hey, I'm missing this, or listen, I got some peeling paint, and the seller doesn't mind, take a picture, because that way if you have a loan officer, they should be able to tell you, or tell you within 24 hours, no, that's not going to be an issue. And yes, you might want to mention to the seller that they need to repaint their third bedroom because there's paint on it. You know what I mean? Or they have a missing tile a glaring tile on the floor. Like, that has to be replaced. It's simple stuff.
I had a house in Tewksbury that I was selling, and it was a VA buyer, and the house had peeling paint all around it, and it was a decent offer though, so they were definitely willing to work with him. Basically, they just scraped the peel and kind of like just went over it didn't look good, but they saw and then the appraiser had to come back out again to make sure that it was it was interesting.
And the one recent change that we did make last year versus this year is because we are smaller and independent, we can, and I mentioned this at the sales meeting, we do have our own list of appraisers. So these, like, we don't have appraisers that will turn a blind eye to peeling paint, but we do have people that will tell us right away what the issue is, so the minute they go out there, we know that there's no way that we can work around this, either to fix it or they don't. And we do, because all appraisers are independent, run into someone that's just obstinate about value, we just check the box and do another appraisal and don't charge your customer. Because we have more faith in what real estate agents and the local professionals feel like values are than not. And those processes are quick. And they happen, in Drake that happened 3 times this year. And those deals were dead in the water if we didn't do new appraisers. And that's a unique flexibility that we have. And we'll be ahead of this information because we have 15 appraisers only, and they only work New York, not New Hampshire and Massachusetts for us. And because we don't have an AMC, we pay them their full fee. So when they usually go out for like a Loan Depot, they're getting $200 out of the $350 they want to charge. When they go out for Ross, they get every penny. So we get better speed and better cooperation.
Good.
So, any questions based on all that stuff? I'm gonna skip back up to the top end.
I have a question.
Sure.
So when you have an FHA appraisal that has issues, can you talk about them going back out to reinspect?
Sure. Yeah, I mean, if it's issues that can be fixed and the seller is wishes to fix it, it no longer requires contractor letters or all that stuff. You go out, the inspector, the appraiser, takes new pictures, you get your average condition, and your buyer has to sign something saying he's satisfied with the work. That seems like, yeah, that's common sense, Joe, but prior to 2 years ago, if you did an appraisal on an FHA home, I don't know if you ever ran into this, and there was work to be done, if it wasn't done by a professional, they wouldn't move it forward.
That's right.
So now that's not the case.
Invoices.
Yeah, the whole bit, like, yeah, it's the license, like, there's no license for a painter in Massachusetts. But I need to get a license for the painter that painted the house. This is what we were dealing with 2 years ago. That kind of nonsense is gone. So FHA has become the tool it used to be, but that said, and to Renee's point, like, it does have its issues if you're not paying attention to the condition of the home. The deal itself should be much easier. Your loan officer, whomever it is, should be setting that person up for The only difference between FHA and a conventional loan is there's a little bit more documentation to an FHA loan. There's no doubt about it. And FHA loans are a little bit more expensive in terms of upfront cost. But the FHA charges and finances the fee. So it's a zero-sum game to a borrower who can't qualify for that conventional loan. And mortgage insurance on an FHA loan for the benefit side is almost always cheaper than first-time home buyer mortgage insurance on an individual conventional loan, unless like it's a rare first-time home buyer with like a 760 FICO and a 5% down and 2-year job. So the payments are competitive. So if you're looking at payments, sustainable payments for your borrowers, you should be having whatever loan officer run it through every product they qualify for. Hey, I have a borrower that wants to buy a $260,000 house. They want all their options between 0 and 5% down. That's where that's what your customer should be starting with. So they have an idea, and then they can go through a USDA loan if you can find a property to qualify for, an FHA loan or a conventional loan, and actually cover the payments and the fees and expenses. Because sometimes everything is by computer or sent out by FedEx or sign this and move that. In the end, the tragedy of anything is that someone doesn't understand something. So you have to be using someone as your partner in lending that over communicates fees, because everything in the end is an issue if something little comes up. And it oughtn't be on something that you're disclosing and redisclosing 3 or 4 times and getting either electronic or physical signatures from borrowers. Like it needs to be explained. They need to understand how and what needs to be brought to closing. And that's probably the most important piece of it. That and making sure that borrower or buyer from your perspective can actually qualify and sustain a loan. Let me just cut through some stuff here. Do some quick credit scores. Anybody have any question about credit scores? Common theories you've seen, anything like that? We are getting a new model this year, which I guess in the best way you can put it, it will be, if you don't have a foreclosure or a major credit event on your FICO analysis, it should boost scores by 10 to 12 points. But a lot of what they wanted to do and talked about in the media this year in terms of FICO scores is not happening. So you're going to see a very similar FICO model market this year. And a lot of talk happened in the middle of last year about how we're going to look at FICO as different, more people are going to qualify. If you have someone that's right there in qualification, a client that wants to do it, but they're in the mid 600s and they really want to get to the high 600s or 700, they just have to basically talk to a professional and start to work through the process of getting the score up. Because there's going to be no miracle rescore that happens in the middle of this year where everyone goes up 20 points. And if your borrower or buyer talked to a loan officer last year and didn't have the scores necessary to qualify, they may have gotten that as a line of, let's just do this next January or February when the FICO model changes, and it's not going to change. And so you understand, people don't need a 700 FICO to get an affordable loan in this economy. You don't need a 700 FICO to get a conventional loan in this economy. The market has opened back up. The ideal FICO is obviously over 700, but if you have a 680, you can pretty much get into almost anything within a quarter or an eighth of a point that anybody can get at 700 for the low down payment loans. And if you have a FICO that exceeds 660 and you're putting 20% down or a 10% down, to Renee's point, we can always work with that stuff. So what you can do with score, really, if they have a 640 or above, they're pretty much ready to go right now. It's just about identifying a program and telling them the little things that they have to do so they can get the best deal when they buy. If they're lower than that, then they should still be making a call into whomever you're dealing with to go over what they need to do to buy when they're ready to buy.
So can we start with square one?
Yes.
When you're meeting with a buyer, they may not even know about their credit score
Exactly.
or where to begin, and we should be saying, talk to you.
Yeah.
They're afraid sometimes to know.
Yeah.
But can you explain how you, not profile them, but how you talk to them first? And, and how you guide the agents to say, send them to us first so that they gain the confidence.
If you find someone interested, the way that we're set up, the way that this specific branch is set up, and throughout the company, you have loan officers, you have resource in Westboro, but essentially our approach to your customer is this: we don't charge anything. We do have to pull your credit. We don't force to pull the credit on the first phone call. If they want to run options, they have an idea what their FICO score is, we'll cover it. But we're not going to issue a pre-qual on a buyer's estimated FICO score. Not really because we are too worried about it, because a pre-qual is a pre-qual, but that screws agents up. Because like you get to have this big long fight with someone who thinks their FICO is 700, and then you pull it and it's 620, and then everyone wastes their time. And so we won't issue it, but we want to have conversations. And that's really the best advice I have for you is if you have someone who's interested, you certainly as a buyer rep need to verify that they have their financing in order. And if they don't, you just need to say you need to start with the conversation. It's never the idea that a hard credit score is going to destroy someone's credit score is not correct. And the idea that they can't look at multiple banks when they look at an offer is not correct. You pull your credit score for a mortgage. Okay, all three bureaus know that's for a mortgage. So that initial pull probably results in anywhere from an 8 to a 14-point drop in your score the next time it's pulled. Not on that time that it's pulled. That time it's pulled, that's the reflection of where your credit is that day. Go ahead.
So the pre-qual or the pre-approval, does that pull your credit?
It does pull your credit. To issue the pre-qual, we need to have 3 scores. But here's the difference. Like we're willing to walk them all the way through estimates. But we just can't give you a pre-qual until we pull their credit because it's a disservice to you.
Right.
You know, we can say, hey, yeah, this borrower in theory looks great. They told me they have this, this, and this. But that's one step below the pre-qual. So that's a verbal conversation that looks good, then a pre-qual when we pull credit, and then a pre-approval if you need it when an underwriter goes through all their income documentation.
Okay.
But yeah, that's generally after we pull credit, it will go one of 2 ways. They'll either be ready right now, and then I'm not saying it's a miracle your borrower wants to buy right now, but when they know they can buy, and they know they have enough money to buy, and they know what their payment is after they buy, and then they can compare that payment with their rent or whatever other situation they have, they're certainly walking away empowered to buy. And generally then they buy in 90 days. And if you don't go through that process and you have someone that's there and they don't get a pre-qual letter, then they're probably either, you know, like Susan said, some of it may be fear, but if they're fearful for that step, like try on the purchase and sales, try on the meeting the lawyer, like try on the appraisal. Like this is, what we do is innocuous in that we don't charge any money, and either you're walking out super positive because you're ready to go right now, or you have a useful tool and a resource, us at Ross, to work until you are ready to go. But it is, you know, in terms of when you need to find out if someone's pre-qualified, I would ask the question frankly and in a very friendly way. But it is absolutely your right as an agent, and you have to know that information. Because if not, when you're making an offer, you're making an offer with someone that may or not be able to buy, and that's not really, that was common I think during the financial crisis and maybe before, but now I think the real strong expectation is that if someone issues a pre-qual and you're in an offer and then in the purchase and sales, like you're ready to go, and that's it. You know, there's not a lot of patience on the back side of things. I've never seen the lack of patience that I see right now at the last minute of things, and the reason why is there should be no last minute. You know, it should be 1 of 100. You know, and when it's not, like experienced people can tell you that generally you can trace it back to a mistake, and 90% of that mistake is a lack of urgency in the beginning of the process. And that starts right with getting pre-qual. And in terms of how ready is your customer, when you say this house looks great, but you got to get pre-qual, then they want to call someone the next minute. I think you can use your own common sense to guide that. Is that customer ready to go right now? And there's other longer term customers that you're going to work with over a longer period of time that may say, yeah, you know, maybe not. But anyone you work with, if you send that information to them and they have a general conversation, it should speed along the time it takes that transaction to comfortably close for that client, because at least they've taken that first step.
Yeah, that's part of our the team's
Yeah.
buyer consult process is to make sure that the client has had a conversation with a lender, and if they have a pre-approval, we ask them to bring it with them. And but I always talk about my own experience as a buyer. I admit almost 15, 17 years ago, my credit was not good, and it was just not something I just didn't even care to deal with. You know, I was just living life, and bill me later was always the option, so whatever. And when I sat down for the first time, I mean, my credit score was like 580, and I was like, so what is that good? Is that bad? And they were like, yeah, that's not, you're not going to own a home anytime soon. So actually, 1 year later, I bought a house, but it was, it took me a year of really working on my credit and understanding how credit works, because if you don't care and you don't understand how it works, you just don't put any effort into it, but it's going to come back to bite you when you realize, okay, I want to buy a house, or I want to have a nice car, or whatever. So I talked to them about that, because I feel like people get very uneasy about credit, especially if they feel that their credit may not be good. It's almost like it's embarrassing to them. So they don't want to bridge the conversation. But in order to make them comfortable, I just talk about my own issue with it, you know, and now my credit's where it should be and it's fine, but it took me a while to get there, because then after you buy the house, you take a little bit of a dip again in your credit, and so it's interesting, but now I get obsessed about my credit.
You have alarms on, you're that person. Yeah. We hear that,
So.
And I think that's the key too, that like in terms of Ross, we're a mortgage company and we're small. There's not a lot other than the people that I've employed that differentiate us from any other lender that you can use. I will tell you this, it's easier for us to solve problems because everything that we deal with is local. So we have a local 203K, a local FHA, USDA, VA, all that happens in Westboro, Mass. So that's easier for us, and like to the point that Renee just made, with Nick and me, like if you have a customer that's not ready now, but it's gonna be ready 9 months from now, we're happy. Not we'll take that customer, we're happy to take over that customer. And you'll see more and more like that go through the process, and then they'll be ready to go next year, and that's kind of part of what you're doing in terms of building your customer database.
And that, can I also add, kind of piggybacking off of what both of you said, the importance of kind of like the planting the seed mentality, that you have a client who might be in that 500 in that low credit score, but that's like planting the seed, how you still have to stay in contact with that person and that individual, still, do the pop-bys, still, hey, I was just, the text message or a call, hey, I was just thinking about you, how's everything going? And still making sure you're having that fluid conversation, because they can still be really, really working hard, and you don't want to lose that connection with them when all of a sudden they are ready, much faster than you kind of would have initially thought, and then they're ready to purchase and you've like kind of backed away from them. So you still have to make sure you're still planting that seed with them as well.
Yeah, it's just a stepping stone. So if somebody really wants to buy a house, they're going to buy a house. It's just a matter of how long it's going to take them and how much they want to spend and all that. So it's like any goal.
Right.
How am I going to get there? That's all.
And I know the lender will work with them to how to get to that goal.
Yeah.
Give them a good.
Yeah, and in terms of general paperwork that if your buyer, a lot of times the agents ask this question through this presentation, and that's why I think Stacy has it, is it, this is what generally you're going to be asked for to start the process. What I would add to this just quickly is, like, we have programs now, like, this is how I look at it. Like Fannie and Freddie are big agencies, they have underwriters, and they look at trends, right? Statistical data of what comes in. And over the course of 3 years of seeing gift for down payment, now they've gone from 2 bank statements to 1. You know why? Because they don't want all the gift documentation. But what that opens up for you as an agent is if someone is getting a gift from their parent and they don't want the parent or relative or whomever that person is to have to fill out 500 pieces of paperwork, we can now use 1 month's bank statement versus 2. So factually, if they wanted to put money in on January 30th, and we pull a new bank statement at the end of February, we have an ending balance and we have a new balance with no large deposits, and we move forward. That has not been the case since this year. And that was a series of a lot of delays and problems in the past where assets are coming from. So if your loan officer asks for the right documentation and you're issued a pre-qual, that should mean that you don't already have a large deposit problem. That should mean that you don't have any delays that are involved with assets. And to the extent that your buyer is telling you, I'm getting a gift, it's going to come the week before closing, like, still be aware that if the loan officer doesn't have that under control right away, that almost always becomes a problem. Because if you're the person giving a $10,000 gift, do you care when you're giving the gift? No, you're concerned about having the $10,000 to give. That's what my concern would be. But then you give the $10,000 and no one tells you that you've got to get this kind of check. You got to fill out this form and that form. By the end of it, the donor hates the gift recipient. And that's what we want to avoid. All that can be avoided. They don't even want to give the gift by the end. If they do it the wrong way, they're taking money out, putting money back in, and you don't need to solve problems like that if you're ahead of problems. So really, all of lending comes down to three things. It comes down to credit, what's on your credit report, collateral, what shape the house is in, and is it going to be average condition to the points that Renee made, and to my biggest thing is capacity, and that's really what do they have saved, and really what do they make, and really what can we use on the application for income, and how much of those assets can we use. That determines capacity. Capacity in mortgage lending is where 80% of problems happen, and the trick of that is you can deal with capacity right away as an agent. You can just tell whatever loan officer you're working with. You went through the bank statements, right? You went through the pay stubs. We're 100% on that. Okay, so now I'm only worried about appraisal and title. You should be that confident to say that to the loan officer every time, and they should have an immediate answer for you, whomever it is.
Do you have any about title? What
We do.
Like how the title might impact issues that come up on title
That's a great point.
process. Because deals have fallen through.
Let's go find out where it is in here.
And typically it's the attorney that orders the title.
Yeah, and I think that's why, this probably purposely not in this presentation, because you'll probably have an attorney related one, but we can talk about that, like in a Q&A type session, like certainly.
So the purpose of the attorney ordering the title is to make sure that it's clean and there's no unexpected liens against it. So typical liens that might be, a very common one is a HELOC, an unpaid or an undischarged. So it's actually been paid, but it's never, the discharge is not recorded at the Registry of Deeds, so there's no official record that has been paid off. And that always comes up.
It does.
More times than not, so now the seller's gotta scurry and find some proof that it's been paid. So that's common, right?
Yeah, in your more rural towns, and I don't know if that would apply, because this is all big and growing, and Tewksbury probably seems rural to people, but not to me. I'm rural. Like, you'll have open permits before you sell your house. That can show up on your title too if you're in certain counties. Like, I took out a permit on one of my homes before I sold it, and right up to selling, like they did it anyway, but it would have been a problem if I didn't know the attorney and the buyer, because I know I had it and I had to get rid of it, and I just had to fill in a form for a permit. But all that can show up. Old tax liens, if people had a divorce or a bankruptcy they didn't take care of. So it will, most of the problems that come up you can work through, but when you have a problem on title, to the point, it's a problem, generally. It's something that will take, if there's a lien on a title that they don't have an immediate remedy for, that's something that you're looking at a month or more, not a week or so. Because generally, even with the old HELOCs, we had one that happened a couple of weeks ago, and it was with Shawmut Bank. I mean, I'm old, so you guys don't probably remember Shawmut Bank.
Yeah, I remember
it was a big
Shawmut,
bank for a long time. It was like Bank of America for like 2 weeks, and then it got bought. It was that old. Like, the person had an undischarged, open, paid off home equity line of credit from Shawmut. I said, "Good luck, brother. We're signing off on this. They're not coming back from that hole."
So what about title insurance? I know title insurance is highly recommended, but they also only cover certain, title companies only work with certain things.
Yes. I mean, if you're dealing with a title insurance company in Massachusetts, I think here's the good news, is that you're dealing with a title insurance is what she's talking about is transferability. Like, will it pay a claim? And in Massachusetts, if you're issued, it almost has to pay any claim, other than if the lawyer practicing and issuing the original closing was committing fraud. So, and all title insurance does is, in the rare occasion of, like, a lien appears that no one knew about, like, the title company is on the hook for that, not your customer, not your attorney. So basically, the insurance is the insurance on your attorney's work, that he sent an abstract to the Registry of Deeds, he checked with the local municipality, and he is certifying that there's no liens on this. And the lien that's on there, the old mortgage for $80,000, that's getting paid off at time of closing, so that one's fine. And then once that's certified, they get insurance, and that's what Renee's talking about. If then after that a lien comes up, that insurance policy will pay. Because we're in Massachusetts and it's an attorney state, which is, there's like 3 left in the country. For a purchase transaction, I always recommend to my clients to get both, both the policy that you have to have for the bank and a private policy, because it's a one-time thing. On refinances that we do, we never recommend both, because then the title insurance doesn't expire ever in terms of when it protected that time period. So I think, it's less important on a refi, and you should get an explanation from your attorney every time you see another title insurance expense on why that's not, I guess that's not your fee to justify. In my mind, that fee is good for consumers, as all insurance policies are. When the hits the fan and you need it, it's there. And when when it doesn't happen, it's a waste of money, like any other insurance policy. But I think the real waste with the buyer's insurance is when you do it on refinances. I did it once on mine, and I've been doing this for 20 years.
But it covers the person.
It absolutely,
not necessarily the property.
No, yeah, exactly. It just covers your client who bought the home. So if a lien can still pop up, but that's not the property's responsibility anymore, and it's not your client's responsibility.
And another thing common that I've heard agents say is, it's a new construction. Why would they need title insurance? Title could affect the land. It's got nothing to do, just because it's a brand new property doesn't mean that you could assume there's no title.
And if you look at that from a reasonable perspective, with any type of experience, or they will tell you that's when you need it the most, because this is when we just set up deeds, we just set up parcel numbers, we just set up taxations. That's really when you need it the most. Like an established property that's been in existence for 300 years, you have a pretty good record of where that title's at. This is a brand new property. So that's when I would suggest it, even more than I would suggest on a regular purchase. Because it does come up. It's like $1,000, and it's not disclosed from your lender because it's not our fee. Attorneys generally don't talk about it in depth, and it's just something that comes up that they should be aware of. Because sometimes, not all the time, but sometimes closings come down to people have $5,000 left in their checking account, and we need $4,000 to close the loan. And in those cases, all these fees become important. And fees that are not explained are tough to take from the customer perspective at the end. And they can't see that from a bank, not because we're, higher than anything, but because we have to disclose every single thing that we do.
So back to offers, because my mind's caffeinated now. So you have 2 deposits that you reflected on an offer to purchase. You have the initial and the P&S. The buyer, so we CC the lender on these deposits so they're aware what's been given. But would you does it matter does it come off the bottom line, or does it come off their deposit, their mortgage, their 20% or whatever they're putting down?
It comes right up. Yeah, their deposit goes right into our asset section as already paid. So it's a credit to the application.
But okay, so is it a credit on the down payment?
Yes.
Okay.
The deposit never flows back to the customer. It flows into the total due at the table.
Yeah.
And that, honestly, we get that question a lot, like, am I going to get my deposit back? And unless the loan offer explains that, yes, you're getting it back, but it's going into your transaction. Sometimes customers, will put $500 down and then $5,000, and, they're looking for a $500 check at the end of the transaction. It's been applied to. These are things, they're little things, but if you're a first-time buyer, and this is what, we have our big meeting tomorrow at Ross, and this is a whole section of what we're covering. We can't assume people know common sense things, because they're common sense to us. But I know, I could walk into an emergency room, and I bet you everything they're going to do to me is common sense to that doctor, not common sense to me. And we can't take that level of assumption to a customer buying a home the first or the 5th time.
Do you refer anyone for title insurance?
Stacy has some people elected. Conway Law we've been using a lot. I have a person that I use, but he's very local. So it's really, that's another partner that you can find and select, and it's really about who you're comfortable with. And I will tell you that I think that clients are probably most receptive to people that are going to put the time and effort in.
Yeah, do you bring it up to the buyer to get
Yes,
the insurance?
yeah, we do. It comes from the attorney. We let your buyer know that they're going to need to select an attorney. Okay. And the attorney, we disclose the fees that are involved in your attorney, and then the attorney takes them through the legal process, which involves what Renee explained. An abstractor goes out and looks at the title. Your attorney reviews the title. If there's a lien, they get the discharges of liens, and then they move it forward. Yes?
Going back to the very first meeting, can you explain how to tell them that they need money, escrow money? Because lots of times they're like, well, I didn't know I needed
Yeah, and I don't have this slide on this, but I can, I'll send it out to everybody here. We have everyone's carded, but it's basically when you close on a loan in whatever municipality you're in, depending on what month it is, you're due for a proportion of the property taxes. So some towns run with taxes behind a quarter. Sometimes it's crazy in Massachusetts because it's all different. But the long story short is when your borrowers establish an escrow account, which most of your borrowers will have to have unless they're putting more than 20% down, at time of purchase, part of their closing cost is usually about a year and 2 months of home insurance premium and anywhere from 3 to 6 months of property taxes. Those are to establish their escrow account because they'll close on a loan in January. Their first payment isn't due until March. So they're not making 2 payments. So that money has to be in there because no matter if they're making payments or not, their first tax bill is due 3 months from when they're there. So that should be well explained to your borrower as a proportion of what they're bringing to closing. And it is disclosed and it's calculated in any application that you'll use with any mortgage company. But the bottom line is it gets forgotten a lot, and that's the part that can change. And you should be looking from, to Susan's point, from your attorney and from your loan officer, a dead accurate amount to close as soon as possible. Because week 1 that might not be possible, but the minute you set your closing date on the purchase and sales, within 24 or 48 hours they should be able to give you the exact amount. Because it's not a mystery then. A certain amount of insurance is due when they pick a premium. A certain amount of taxes are due based on the date. So all of this can be squared away. And again, we talked about earlier, not be a surprise if it's attacked early and you're getting the information. Listen, this is a loan officer's job, so they should be doing it, but as an idea of what to look out for. You know, these are the common things that trip people up.
How soon will they know the closing costs, the exact?
I mean, honestly, when we issue a pre-qual, as soon as they have an address to put an offer on, like we send out a 1003 with what we call an LE or a loan estimate that day. And at that will usually be an overestimate of what they'll have to bring. And then once they select a property and then select a closing date, then they'll get the exact numbers based on the exact amount of days of interest, the exact amount of insurance due, and the exact amount of taxes.
Issues why deals fall through, like unexpected, like quirky things.
You know, this is my 20th year, which is crazy, of doing this, and I can give you a historical perspective of this. That ran the gamut for my first 10 years. Through the financial crisis, it could be anything. You know, it could be factually anything. Oh, there's a bee in the house today. We're not closing the loan. It was. Now, if you're missing a deal, this is what I would tell you. You should know that there's an issue within 3 or 4 days at the very latest of the purchase and sales. And then that issue can maybe result in a delay. And generally, the only issues we see are those that you'll see on every bank's do's or don'ts. Like they dumped a bunch of money in it the day before and your loan officer didn't check the bank account. They got a new job in the middle of the process and didn't think it would be a big deal because they're making more money. Again, common sense things that I wouldn't do, but I wouldn't know not to do if it didn't fall through. And on occasion, and not really in the areas that you're dealing with, but more towards the North Shore, we're not losing deals, but we're getting a re-expectation and purchase and sales adjusted based on value. The idea that we're going to continue to roll a 10% appreciation year to year anywhere is kind of done with appraisers. They've reached their limit specifically on multifamilies. And that's really, other than self-induced wounds, Renee, that's we don't see things, you know.
What about like citizenship? Does that, what?
Not because we're very, like, we're detailed about that up front. So even if it's on, and we worked through someone last week that's on, was on a part, there's a lot of ways to do those if you're in front of it.
Okay.
And you have a willing customer that will go back to immigration and not fearful that something terrible will happen to them. So if they have the right paperwork to start, you can almost always work through any type of citizen issue if their resident status allows them to buy.
They need a social security.
Yeah, because they pull credit. Yeah,
Right.
but Social Security has nothing to do with citizenship. The minute you get a visa here to work in any way, you get a Social Security number so you can pay taxes. So if they open a credit card and they do this and that, and then they have something that there's all kinds of unique rules based on what type of visa it is. If it's not a citizenship visa, but the general rule of thumb is if they have 2 or 3 years left on their current work authorization, whatever term you want to use, you should be good to go, unless it's under an emergency status or a status that has to do with asylum, and that's a whole different deal. And we have run into that once. We were able to get it done though because they reapplied for asylum again and got it. So I guess in that case they were lucky from where they came from. In no other case they were. So. Yeah. This is a great presentation. I can't take credit for it, Stacy. I didn't get into fixed versus adjustable rate because here's the deal right now in real world terms. HELOC rates are 5.5 and first mortgage rates are below 5. So if you're taking adjustable rate, you're just flat crazy. There's no real reason for it. That will come back probably in the future when fixed rates exceed 6 or 7%, but until that time, the only adjustable product we offer is one, if you have a first-time home buyer that meets a certain income threshold, we can do 100% financing through both Mass Housing, which is a fixed rate, and Fidelity Bank in Leominster, which is 100% 7/1 arm that runs about a point below market. So that's the only time we do an adjustable. I don't really like to get into them, and we're a company, we love, jumbo loans are great, but that's not our customer. Our customer is your customer.
Can you do like page 15 on and show them trying to help them understand the things that are needed in those first few weeks to pull stuff together?
Mm-hmm.
Yeah.
So let me show you this one. It's up there too. I mean, these are the things that we do. We find out about what they have for down payment. We go through what we need from income. Credit is right off the bat, and part of I think why we've gotten a lot of successful transfers over from LAER is because we don't charge any money to do all this upfront work, and a lot of companies don't. Like Quicken doesn't, but most companies that are local, when you go in and pull a tri-merge and do all those things, are looking for something, either a 2-hour appointment with the bank guy that does it, or money for a credit report fee. So to be clear with your customers, we take them through all this process, and it's a necessary, pretty detailed process for nothing. And then once we get all that information together, to Susan's point, we issue a pre-qual and some different options on how they can finance the home. And if they have that done and they have a pre-qual in, the day you make an offer, again, the day the offer is accepted, we're already past step 2 on this chart. Or 3. Once our offer is accepted, we're talking to your customer about any other thing that we would need that we don't already have, which we should have most of it. And really, that becomes about, at that point, what way do you want to finance this home? Are we doing 3%? Are we doing 5%? Are you doing gift and doing 10%? Do you want to do it with MI? Do you want to use our new option to buy out MI? Is it an FHA customer? That all happens at step 4. And at that point, when your customer makes a decision, we submit it into underwriting, and our process generally takes care of the rest. So I don't want to overcomplicate it. If we're ahead of it from pre-qual status, all these steps take care of themselves because the whole first top of that box, to Susan's point, is already done. So when you start your steps that your borrower needs, you're starting at step 5, which is unapproved loan.
I have a question. Can you explain a USDA loan?
Sure.
I've never.
Yeah, USDA is a unique loan. It's obviously sponsored by the Department of Agriculture. They give so much money to it every year. And if your home qualifies for USDA, which Nick will send you all links, you can pull any address up, and it will tell you automatically, number 1, if it's USAID eligible, and if it is, what the income limit is. So if you have, a house in Draken, and the income limit's $100,000, you could have someone who makes less than $100,000 go in there and buy that house with 0% down.
So USDA is a limited income loan?
Yeah, it's an income
base.
Yes, exactly right.
Okay.
And here's the trick with USDA. It's such a good program and so well priced that they legitimately want verification and they seek it to make sure the people that are getting these homes aren't exceeding the income. So it doesn't just go by who's on the loan. We can make that almost every case.
Yeah.
They want to know who's living in the house. So if they don't get crazy, but say you live in the house and I'm moving in the house and I'm moving with my wife, and my wife works too, but I'm not using her on the application. I can't get that loan if our income exceeds $80,000 to get it. It goes by household, exactly right. Now, can it be worked around? Yeah, but it's never a good idea to work it around. But what is a good idea is to find out what's USDA eligible, because if you're looking around the room, you're going to have buyers coming from every different area. But if you're dealing with buyers that are just jumping into a work market with 2 years history, don't have a lot down, but have good credit, and you're looking in the areas that most of the people here are servicing, there's a lot more USDA homes than you think. Like, you would never think there's USDA homes in Worcester. There is. There are some areas that have no USDA. That's not it, because they have other federal programs. I think Lowell may be one, Lawrence. There's other areas because they have other federal programs covering them. So they just absolutely don't do it. And like, Worcester may even be that example, but like a Leominster has them. Outskirts of Fitchburg has them. Like, weird different places. And it's as simple as Nick will send you the tool, putting in the address, and it will tell you, yes, it's USDA eligible, and this is the maximum income. And if it is, that's a program we offer. And from a cost basis, it's more expensive in the fee that they charge, but it's just like FHA, and they roll it in, and there's no mortgage insurance, and rates are conventional rates. So it's a pretty safe. You can zero down.
So my question is, the scripts that we need when we're presenting an offer and telling a story to the listing agent, and who has to tell the story to the seller, in the case of USDA and or VA, we get pushback so many times when it's 0% down. Because a lot of times the seller feels that if there isn't escrow money, then the buyer isn't worthy. Well,
and here's I think here's the misconception with that, and that's a great point, because I had this call, because my 2 previous jobs from this one, it was with a company that specifically dealt with VA, and this was the workaround from that. When I dealt with a veteran, I never said the program requires 0% down. There needs to be a clear differentiation between that and you don't have to have any money. Because they still have to have the $1,000 or $500 that the real estate agent wants to put down. They still have to have the $1,000 at the purchase and sale. Here's the only difference: they get it all back.
Right.
That's it. But the idea that they're going to expect a seller's agent, a buyer's agent, to go out and present an offer with a piece of paper and zero down on a closing date, they're not going to take it. They have to be prepared to go out and put, a certain amount down deposit, and then the VA loan works the same way. They just get that money back.
Do you have to put that in the offer, saying that the loan requires it to be sent back to them?
No, but the math in the disclosures that your borrower will get, or in that case the veteran will get, will show him that he's getting it back.
Okay.
So it won't, the paperwork won't reflect that. We'll quote him no closing costs or whatever we can do, and then he'll see the math that shows that $1,500 coming back to him.
Gotcha.
So I have a question. So like I have somebody that is using NACA.
Yeah.
Which is, so what are your thoughts on it? Because I've heard super mixed reviews about it, and she is super adamant on using it and not talking to a loan officer. Like, she's being a pain in my butt about it.
Yeah.
And I don't know what direction to try to attempt to push her in to be able to get, because she really wants a home.
Yeah, and that's
the first time home.
And this is the program. There's like $1 billion for it, right? It's throughout the country. It's run by a guy from Massachusetts.
Yeah.
It's a great product. It's not something that we talk about, because literally what they have to do, and it's great if they qualify for it.
Yeah.
But they do all their paperwork over a year, and then one day they'll come to Boston, and 1,000 people will go in there and sign paperwork.
Yeah, so like she had to do a class on it, and I was told that if I wanted to be her buyer's agent, I have to do a class on it.
Yeah, and I don't think the class is probably expensive. It probably is just time consuming, and I would do it.
Like
I wouldn't anticipate that producing a lot of volume. That's more of a program that gets year-to-year funding from the federal government in exchange kind of for all the egregious behavior that happened with banking for a certain period of time.
Yeah.
But that's like, that's essentially responsible subprime. What subprime was supposed to be, and all the best aspirational values that it had, is what NACA is. It seeks out people that work hard and they can pay their bills and afford it, and doesn't acknowledge credit score. And in that way, it's great. It's limited. Once they say they can close, they're closing. They're a professional organization.
Okay,
but the time involved in waiting, if someone has 3 or 5% down and can access a loan outside of NACA and wants to do that, that's great. If they can qualify for a NACA loan, they're certainly going to get better terms because it's a government program.
Well, now with that, are they allowed to have a gift if they go through NACA for a down payment?
Yeah, I mean, I think probably their guidelines at NACA are very liberal, so probably.
Okay, because that's like the situation is like she's getting a very big gift from her parents essentially, who sold their second home.
Yeah.
And they're just like, this is to help you with your down payment, your closing costs, whatever. But where I had never heard of it.
Yeah, and honestly, like, I will do some research, and Nick will too. I've never heard of a situation where someone is getting a NACA loan and a gift.
So, and so someone told me, like another agent, I had asked just kind of around, like,
Yeah.
who had dealt with it, and they're like, be careful because it's a 0% down,
Mm-hmm.
but I've seen things fall apart right at closing.
Yeah.
Because of the loan, not even because of...
Well, I'll tell you this.
So, like,
I think that in like the VA, like they're doing a very solid inspection of that house, and I don't think if they're asking people for no money down and giving them a rate of point below what going rates are, they're probably not going to take many chances with properties. They're going to be selective.
Yeah.
So NACA's not very responsive. I closed the NACA
Yeah.
loan,
Yeah.
and they're not very responsive. It took actually 2 months to close because
Okay.
they couldn't close on time.
Oh, okay.
So
Yeah.
I don't know.
I mean, that's the
Aware
one.
of
Yeah,
that.
yeah.
Well, so she will not even like talk
Yeah.
to a loan officer, and I'm like, you need to see your other options. Like, just because somebody told you this was good and it worked for them,
Yeah.
doesn't mean it's your best option.
Yeah.
You could be screwing yourself.
Yeah.
You don't know.
Or the other part of it too is, frankly, she could know something that you don't know. She could have a credit event, or he could have a credit event in the past that they know this is their only option, and it's easier sometimes. And this is a long time for me to learn this lesson for customers to tell you what they want you to think than what really is the real deal. Because in the real world, you're 100% right. If you're getting a gift for even $5,000, why aren't you looking at every different way to do it? Because it may be a way that we can right now, with the recent dip in rates, that we can beat what they're offering.
Well, and that's the thing. She's getting upwards of like $50,000.
Yeah.
So she's not getting a small gift of
Yeah.
5 or 10,000.
Yeah.
So
Yeah.
if you're doing that, you have
Yeah.
a copious amount of money. Why would you not?
No, yeah, and
see
that
what your rates are.
and that's it. And that same client, that same profile with any kind of job for 2 years is going to get a conventional loan. So it's kind of crazy, but
Yeah.
I don't know what are you going to be able to do with that, right?
Yeah, she's tough.
I think the biggest point with NACA, because I've dealt with them, is who your representative is in NACA
Yeah.
and how responsive they are, right?
Okay.
So my understanding was that they only have one NACA representative for like
The
a
whole
huge
state, or like a huge
section
section.
of the state. So if that person's overwhelmed and doesn't have anybody else to do it, or she's on vacation or whatever
They're
it
gonna
is,
fall behind a little
you're
bit.
not going to get your stuff done. So if you have the patience and your client has the patience, then it's a good program. But be sure to make sure
Slower
that you
process.
know things are going to happen.
Yeah, well, and that's the tougher thing too, is she's on a tighter timeline, and I try to explain to her that,
Yeah.
if this is when you wanna be in, you need to look at everything,
Yeah.
because you don't know, and
Yeah.
we don't know what could happen.
Yeah.
Mm-hmm.
And having not dealt with it, I don't necessarily know what I'm getting into. And
Yeah.
She knows that, she knows
Yeah.
that I've never dealt with it and things like that, so,
Mm.
but she's just like very tough.
Just,
like
I'd say,
that,
I mean,
that she won't
Yeah.
open
And they're
her
really
horizons.
strict with who they use as agents. So if you do want to become a NACA agent, you do have to go through the process. You have to go and
Yeah.
be that NACA's side agent to do it, because they'll just refer it to their own agent.
Yeah, and she told me that,
Okay.
so.
We have a question from the Rose team. This goes back to when we were talking about social security numbers, and the person says, how does a foreign buyer, non-US citizen, qualify?
They can, depending on their residency type, I would just need to see if they have either a green card or a residency form. And I need to identify what the residency type is and how much longer they have available on that particular permission to be in the country of working, and we can see what programs. But we have them in everything but a VA program. We can find a way to do it, but I can't guess at the residency status. We have to just send it up to the underwriter. But we've worked through almost everything, including an asylum that expired. So they're more liberal than they've been. That's just a question from the cyber world. Kind of got weirded out. Didn't know anyone was watching. No, I just didn't know anyone was watching.
Oh,
Yeah, so,
we have, I'm sorry, this is being live streamed and
Oh, yeah, no,
recorded.
I said at the beginning, I said I'm going to pretend, but I was like, yeah, there's no one on. And just like I'm done with this spiel. Honestly, LAER is our most important account. We're not going to force ourselves down anyone's throats here. Nick and I are available for any questions or any of your customers' questions. We do run 7 days a week, so there's no bad day to reach out if you have a question.
LAER, can we talk about the LAER desk?
Yeah.
Oh, I was gonna say, don't you guys bump us up on the underwriting?
Yes.
Because we're late?
Yeah, 100%. When
Right.
we get a file in, our underwriters and processors have 48 hours to get it into underwriting, and then another 24 hours to get it underwritten. So we're usually through your files when we have the documentation to your customers in 3 days. And we've closed loans like last month for certain teams in LAER in as fast as 12 or 13 days. We have 2 that we got yesterday from LAER agents that were turned down from other places that we are going to get done on the 30th. I just got a confirmation on the appraisal. And that's kind of where if you need to start with a weird problem or you're in a rush or you have some situation you haven't seen before, like there's loan officers assigned to all your branches, but don't ever hesitate to reach out to me. Because I'm available and I will tell you yes or no from the beginning, and if I give you a yes, we're going to 99% close it unless something crazy happens. Yeah. Asteroids.
The LAER desk?
Yeah. Based on a lot of bad feedback on that, that's why I sent you the assignments from LAER. Like, that's how that's
Okay.
going to roll now. Basically, your first idea, you told me. We're going to that.
Questions, we're always there available.
Yeah, and that's... for me, if you have anything, honestly, if you don't know or aren't comfortable or haven't been introduced to your loan officer yet, like whatever branch you work in, they're going to be around. We have it split now where I have appropriate staffing. We have 11 loan officers working the account. We have our meeting tomorrow, and part of having the privilege to work LAER accounts is being in a branch once a week. So not only will I be traveling around, but you'll see loan officers that are qualified to handle your business. But at all times, feel free to start with me. I'm not, like, I don't work as a loan officer, like that's the part of it that Nick does for me, but I talk to customers, I explain things to customers. I have no problem taking your customer all the way through the process. It's just at the end on the 1003, it doesn't say loan officer. That's it. It's not a big deal. I know we did so you have an idea, we did $60 million the year before I got to Ross. Last year we closed out $130 million worth of volume, which was a big step forward for us, and over 30 was from LAER. And this year we're trying to do 200 million, which everyone I think thinks that's a crazy number, but that's what I think that we can do. So, and we really appreciate all these opportunities, and I am uber available for questions. That's what I love doing. It's weird, but I like talking about mortgages, so let me know.
So Job, thank you for that. We're going to take a pause for a minute and restructure ourselves as Jamie comes on to talk about list reports for Ross Mortgage.
List reports, which is a product that we offer free to all of you. It's offered through Ross Mortgage. It's just another tool that you can add to everything that you have with LAER. If you are new to the company, anytime that somebody is new, I would be sending you an invitation. So if you see something from list reports, you can go ahead and sign up. Like I said, it's free. Just make sure you're signing up as an agent. There would be an email that would come to your LAER email address, and then you can log in and you have access to a bunch of different marketing materials, which I want to show to you. So actually, I'm going to click really quick here. I just want you to be able to see there's a one thing about list reports. There's a lot of great materials on there, videos, different just things that you can read that can help you out. But you can always contact me. If I don't know the answer to a question that you have regarding list reports, I can always find out. Their support is very good and very helpful. So I'm going to click on this really quick. I just want you to be able to watch their agent video so you can kind of get a good idea of what list reports is all about. So click that.
Hi everyone, my name is Katie and I'm part of the account management team here at List Reports. Your loan officer is sending you this video because they are committed to your increased success. List Reports is 100% free for you, and it is the complete lead gen and intuitive marketing solution used by over 50,000 agents. We equip you with everything you need to bring more mobile leads and automate the follow-up process via text message. Here's how it works. We give you everything you need for your next open house, including custom flyers, infographics, property websites, reusable sign writers, postcard templates, and much more. When you have a new listing, we'll automatically send you all the assets you need to market your property as soon as your listing is live. Our full-service customer success team is here to help you. Need a photo swapped out? Want a custom text or color palettes on your marketing assets? No problem, we've got your back. You'll also be equipped with the text-to-lead codes. These codes ensure you capture the right contact info, and we send back marketing assets directly to your prospects' smartphones. We even automate the follow-up process for you. Our text alerts ensure that you stay top of mind with your leads. List Reports is here for you at every stage of your business. So whether you're representing a new property, hosting an open house, helping your buyers find their perfect home, or looking for an impression at your next listing appointment, we've got you covered. List Reports is the proven open house marketing solution, and
Okay, so what actually happens with list reports is once you're signed up, once you have a listing that actually goes live, list reports will actually pull right from MLS and they'll create a list report for you. So there's nothing you even need to do. So if you, anytime it comes live, it's already done, you'll get an email that it's been completed. You can obviously make any changes to it. I'll show you what it looks like on the dashboard. But you know, it's automated for you. So it makes it very, very simple. If you, you can log in and obviously do things on your own, but you don't even have to do that because everything will be done automatically. There's a bunch of different features with list reports. I'll show you what they look like, but there's open house flyers. The infographics are really nice because they pull from information. For example, in this town, they would show you, you know, things that are close by. It gives you information on the schools, which you can edit or, you know, if you wanted to include or not include. There are pre-listing presentations, property reports, neighborhood reports. Postcards are very, very popular. We use a lot of postcards. All of these materials are available to download. You can share via email. You can also share online, Facebook, Twitter. They print beautifully. So, you know, open house sheets are very popular. We do a lot of those as well. So there's just a lot of different marketing assets that you can use, including there's a property website for each list report that's created. So
how do you do that? Sorry, how do you do the postcards?
The postcards, once a list report is created, I'll show you the list. It gives you everything that you could possibly use for that list report. The postcards are at the bottom. They come in a bunch of different sizes. You can download them and then you can print them. Personally, we typically will print through Vistaprint. But if you had, you know, if you were able to do it on your own, you could do that as well. The open house flyers, like I said, we use a lot of those. They're very popular. You can actually customize those with the date that your open house is and the time. And those have been printed a lot. We do a lot of those, and a lot of times we'll put those through Staples, and you can just print them that way as well.
I could be their best publicist, but on the open house flyer alone, the infographics that are attached to that are phenomenal. Yeah. So if you have those, it's all in one thing. So if you have those at your open house, and you have somebody coming new to the area, they get to see community information, right, school information, and all of that. Oh, that's nice. We can go back to that. We have a question from the Rose team. Mm-hmm. Is there a charge for the sign writers? And if not, how do we get them?
If you wanted a sign, there are charges for the sign writers. However, if you would like one, we can order those through Ross. You would just need to reach out to me and let me know what you were looking for. There's different options with the sign writers. I'll show you as well, and I'll explain to you what the sign writers are too in a couple of minutes. There's different, you know, custom color palettes and a couple different other things. So you would need to choose that as well. But I've also ordered those, a bunch of those, so that's not a problem. You just would need to reach out to me, and I'll give you my contact information at the end.
How much are they?
As far as I know, Ross has been providing those for agents at LAER, so just let me know and we can look at it from there.
Awesome.
Yeah. Yeah, so they would just go on your signs, and then and I can explain to you too, the text to lead codes are really nice. That's really what you want those sign writers for, is that text to lead code, so that you can capture you know, prospects' information when they go past your properties. So I'll get into that after too. I'm actually logged into my own account. It does look a little bit different from yours because I am a lender. I took one of the listings that came up recently, and I just wanted to bring it up just so I could show you what it looks like in here, so that you can kind of see what all the options are. But if you were logged in, this is your dashboard. So once you actually do you know, sign up and go into your account, you'll have this is what it looks like. Your information, the upper right hand corner of the screen is where you'd want to go to put in personal information. So you want to make sure you have, you know, the correct phone number in there, your correct email address. There's a spot for a bio and things like that in there, so you would want to go in, put that information in as well. There's also a settings area that you'd want to do. I just want to go in here to see. Under the list report settings, this is where the short code is going to come into play that I want to talk about when it comes to sign writers and also your marketing materials. Though that code can show up, you can actually make one that's unique to you. You can see mine says Jamie, just as a sample, and that would be what would show up on all of your marketing materials. Every single piece of list reports marketing materials, when it's created, automatically has a text to lead code on it that's just created by list reports. Every single one of them is different, and then when a potential client goes by, they would text that number in there and they would get the information to a 1-800 number. But you can actually set it up so that you have your own, and that will show up on everything that's created for list reports for you going forward. So that's something that you probably would want to think about, so that you have that on all your marketing materials. So you would go into your settings to create that as well. The dashboard is really, list reports is very simple to use in my opinion. It's a pretty basic and user-friendly product. I feel like if you had something that you wanted to create, you simply go to new list report. There are a couple of rules with list reports. List reports does not do land. They do not do commercial properties as well. You do need to have some photos available. If you only have one picture, this won't work. They want at least 4. So you're going to want to make sure that you have that. Again, I told you that everything is automated. So if your listing is live, it's going to pull that information automatically. However, you can go in. We've switched out many photos in different list reports, and you can do that. Everything, there's many options for edits that are instant. So if you have something, you want to change the color palette on it, or you want to change a photo, change the price of the property, maybe the property description, those things all are instant. So I'll show you where you can make those edits, and then like I said, within a couple minutes you'll have a new list report. If you're going to create a list report under new list report, if it was something that wasn't already done for you, or maybe you have something that's coming on the market shortly that you want to kind of maybe do a pre-listing presentation for, or something like that, you can just go in here. You would need, obviously anything with an asterisk is required, so a property address. You would choose the listing scenario, whether it's active or pre-listing, and then you can see what the other options are as well. The reference URL is not mandatory. However, if I'm creating one for someone, I do try to find it if it's an active listing, just so that it gives them some more information when they're creating the report. And obviously the agent, you don't need to do that, because that's something that that's just for me as a lender. So there's a lot of different options in here that you can choose. This would be if you were entering, information about your property, you could put that in there. Again, this is not required information. You can see there's no asterisks, but if it's a pre-listing, you would need to put that information in. Optional photo selection, you can upload right from your computer. So you could do that if you needed to. Again, if you're entering this manually. Customizing your flyers would be if you wanted to add open house info or maybe custom text. You would put that in there, and then this is where you would change. Everything defaults to the list report's blue color scheme, but if you went in here, there's a lot of different options for different color palettes. So you can actually click on to see what, bless you, what your options are. There's many different choices. Yeah. So. Yeah.
Oh, cool.
And
Yeah.
you just flip through until I figure out which one I want.
That's exactly, yes. Yeah, but there's, you can see there's quite a few different possibilities. They go by, color options. So it's fun to be able to change those up. Like I said, if it's running automatically and pulling off of MLS, it's going to just pick that list reports blue, which is fine. But this gives you another option, many options actually. So you would go in there. Anything else that you'd want to put, this is actually for me, and then any special instructions that you have, you could put in the bottom section. There have been times that maybe I've gone to run a report, and actually a lot of times what has happened is we've wanted to maybe run just sold postcards, and maybe the property is no longer active, but I want to go back in and I want to have them rerun it so I can order those just sold postcards because they're showing that it's not an active listing. I would go in here and I would enter that and just explain what I'm trying to do, and then they'll take care of it from there. You want to make sure you go in. Obviously, I don't have a headshot in here or a company logo, but you would want to go in and you want to put that in there under your settings as well, so that'll show up every single time that you order a report. Are there any questions so far? No? Okay. An activity feed would just show what you've done so far, what's happened through list reports. This is mine, so it's showing where these things have been sent to, but yours would show anything that you've done so far in your account.
Can you talk about the pre-listing stuff?
Yes, so pre-listings would be if you wanted to maybe go, if you're having a meeting with somebody and you want to show them kind of what you can do through list reports, you could go in. There's certain materials that you don't have access to because it's not an active listing, but there are some things that you can use. The pre-listing presentations, infographics you can have access to. So you can run them, it's just that you won't have access to as much information as you would with an active listing. But you can definitely utilize it. The pre-listing presentations are very nice, and they kind of give you something that you can bring to your potential clients to show them, you know, what you can do. Okay, so let's see what else I want to cover. Over profile, dashboard, your activity feed, where you'll see all your activity. The My Lender section you're going to have in your account, that's where you could go and change your lender. If you wanted to, it's really simple to do. When I send you an invitation, you're automatically paired with the lender that's assigned to your office, so it's not something that you have to do, but that's in there as well. Relationships in the account is where your all your leads will come. So you're going to have that on your dashboard. So when a particular, client will go by your property and they use that text to lead code that I'm going to show you, this is where that information is going to go. It's all in real time. So you'll get information on, whatever, if you put in your cell phone, you'll get it there and an email, but it also goes here too. So this is where it's all saved. So you can go back and access it. And list reports will capture as much information as they can. On the property website, clients can actually put in more information. So if they put in name and all that information, that'll get saved here as well. If they're just putting it in on their cell phone, you'll get their phone number and that'll show up there.
Is this only if they use a sign writer?
If they use the text to lead code, period, whether it's off a sign writer or if they see something on a postcard that you send or if it's on your open, it's on every piece.
In this.
It'll show up here after they've done that, after they've gone through and done it. So, and I'll show you where the text to lead code is too. I'll go back to this in a second. So let me go back and just go back into this one. Okay, so this is where once you've ordered a list report on your dashboard, you saw the list that I had that showed the different reports that have been run. You would just pick the one that you wanted to go into. Everything will show up here that you're able to use. And you can see if I scroll down, there's many different options between postcards, the sign writers, listing presentations, and all kinds of different flyers as well. I'm just going to go into the open house flyer and just show you what that looks like. You can see this is just the list reports blue, but this is the basic idea of what they look like. Right here in this gold bar is that text to lead code. As you can see, this particular one just has one that's assigned a unique code by list reports. So on all your marketing materials, that gold bar exists and people can utilize that. They would text that code to this 800 number, and then they get this information on their phone right here. Goes right to their smartphone. This is the property website that they can click on. They can learn about the home. They can see the infographics. Photos would be here. The financing information would connect to us, your loan officer at Ross, and then obviously your information would be here as well, and I can show you what the property website looks like, and then you can meet the lender. But they would get information that they can click through, so they can see all that information, and then you'll be able to capture their information on your end as well in that relationship section, and then you'll also get information sent directly to you in real time that somebody has interest in your property.
So it's basically a landing page for your listing. So they just send it in,
Yep.
text you, and they get all the information based on that one listing that they're looking at.
Correct.
And then they can also search as well. So if they're bored of that one, they'll
Yep.
continue to go.
Yeah, they can see your
It's
other.
all
Yeah.
branded to you.
Yes.
nice.
Yes. Everything through this is branded to you. It is also branded to Ross as well.
And when they do text, Ross gets the text message as well. So
We
if
get-
you're busy, they'll get it as well.
Yes, we get the same information that you do, we get as well. And it comes right to us in real time. So we will all get that information. Yeah.
Have you gotten a lot off your sign writers?
I've had a few people that were just outside interested, and then I called them like, I'm around the corner, you want to go see it? So it does work.
But you can see down below too on the list report, you can see that it's co-branded with both your information and then Ross's information as well. And then the nice feature is on the back page, you have the information about the infographics as well. And like I said, these all print beautifully, front and back. So the open house sheets are really nice to bring when you have an open house. So that's just gives you kind of an idea of what that looks like. And I'll bring you to the property website so you can see as well. So this is what I was talking about for every property. So it gives you some information about the home, photo gallery, which I really like because it gives you a lot of different pictures that you can scroll through. Oops, go to the back too because I want to show you that it does give you those infographics as well towards the end. So you get to see all that information as well. Exploring the area would be, again, those infographics, and then you would get to meet your agent. They can contact you right that way. So you get their name, email address, phone number, submit, and then you get that information, and then the same for us. We have that as well if they want to look at financing information. So that's where that text to lead code really comes in handy. They'll get that information, and then you do as well.
You can post that link and share it to your Facebook, everywhere.
Yep.
And that way it's just only you guys. They don't go to any other site.
Yep. So you can see right here too. You can see that the option is to share, copy, Facebook share. You can email it to yourself, or you can tweet it as well. And then it gives you the option just to share right here also. And then anything that's available to order is over here. They do order some. They have some options for ordering directly through them. Most of the time I do download and I just order separately. Let me just show you the postcards too, because those are really nice. This is the front of the postcard. That's a jumbo postcard. That's typically what we'll order. We do a lot of every door direct mail, so this is the option that we have. That's what they allow us to do. You can see the text to lead codes on this as well, just like it is on everything else. And like I said, if you choose to do your own short code, your own unique reusable short code, instead of the saying list and then having that number, it'll show your information on here for every single list report that you order.
How do you change that again?
In your profile, under list report settings,
okay.
You'll want to go in, and it has to, I think 10 characters is the limit. So you'll want to come up with something that you'd want that's within that range. And this is what the postcards look like. So there's a lot of different options too for postcards. If you do decide you want to send them out, let me just.
I think mine is sold Kiki, text
Yep.
to sold Kiki or whatever it was.
See if I can get this to come up
Make it
for
easier.
you. So there's other options so we have the coming soon postcard, the in escrow, just listed, just sold, open house. There's a promotional one that doesn't have any information on it, so you could use that as well. And then there's an under contract. I think we do a lot of just listed and just sold postcards. They're really the most popular. But there's a lot of other options here too. You can see different flyers that you could utilize, pre-listing presentation, which I could click on just to show you what that looks like as well. You can see what this kind of gives you some other options. Would also have the infographics on it and all of that information too. So this is where you'd go to access all that information. If you did want to make any changes, it's really simple. You edit the report. And here are all your instant edits that you can do. Changing address, price, property description, open house information. You can put custom text on if you want, add new photos. The school information is editable as well. And if you had any questions too, again, anything with this, I'm always available. I'm happy to help you out. I'm happy to run reports. I'm happy to edit reports so you don't have to do it. I'm also available if anybody has any questions, regarding just kind of going over it and training and that type of thing. I'm always available for that. I'm happy to help out.
Did you show what the riders look like?
Oh, I haven't done the riders. You're right. Thank you. Go back. So sign riders are over here. These are what they look like. Like I said, there's a couple different options. 1, 2, and 3 for choices. This is not the only color that they come in. You can actually, just like I showed you, there's a million different choices for these, so you can go any way you want. But if we are going to order something like this, you just would need to let me know which choice you wanted. You'd have to go in and just look at the color palettes. It gives you, under shop, it gives you the option. I can send you that link as well, so you can kind of see what the color choices are, and then we can go from there. I need to know just that information, where you'd want it shipped to and all that stuff. But I can take care of all that on my end. It's very simple to do. So these are your options. These would just go obviously on your signs, and then anytime someone would drive by and they wanted to find out more information about the property, that's where they use that text to lead code. Again, this would show up with your information. If you make your own reusable code, that would be there as opposed to that list number. The list reports does use that geolocation technology. So if a client doesn't have it on there, they would just bring them to your page, so they'd be able to see whatever properties you had listed. So it won't matter if they don't have those location services turned on. It still will bring them to information about you, and they'll be able to find the property that way. But that's what they look like. Just to make sure I'm not forgetting anything that I wanted to cover. There's your lead generating assets. The customer service team, like I said, anytime you have information or have questions for list reports, it's support@listreports.com. But like I said, I'm happy to help out too. And if I can't give you the answer, I'll find out for you. Are there any questions so far? Did I miss anything that? All right. I think that's all I really have. Like I said, my email is jamie.tower. It's jamie.tower@rossmortgageco.com.
Oh God. Can you repeat that?
jamie.tower@rossmortgageco.com. And my number is 508-782-0169. If anyone has any questions or wants to go a little bit more in depth with this, I'm happy to do that. Oh, nice!
So this is a
No,
year's
no,
worth
no,
of
Put it in front of
wear
Jen.
and tear.
Here.
So it's on the screen.
Use the nicer one.
There we go. Yep.
So, yeah.
Yep. I love it.
All right, I'll take 3.
You just put them on top of your sign rider or below, wherever it is.
I love it.
I think they could put, oh, you have holes in yours. Yeah, there's
Yeah, they come with
yeah,
holes.
yeah.
Yeah.
Awesome. And Jamie will be here to answer questions. I'm just going to wrap up for you.
Sure.
Oh, so thank you very much, Jamie, for the list reports, which is an awesome free service from Ross Mortgage. There's so much content to it, and there's so many documents within it that you can repurpose and use in your social media, and it's also very easy to share to your social media or to your clients or to your database. There's just a lot of content there to use and in beautiful formats. Tomorrow, I just wanted to let you know that we will be talking about listing presentations and contracts. We have a guest attorney coming first thing in the morning to discuss contracts, and we also have a group of stagers coming, setting the space. They are new members of our LAER concierge team, and they're going to be talking about getting your home ready for listing by staging and putting your first impression as important as it is to get out there to have everything ready when you list the house. So we will see you tomorrow morning at 9 o'clock, and as usual, if you have any questions, just let me know.